Hello, everyone. Welcome back to another insightful edition of our weekend series focusing on price action based technical analysis. Today, we will be re examining the USDJPY as the impact of soft inflation data could potentially influence the Bank of Japan to delay its plans for an exit from loose monetary policies. In my opinion, the bulls might get further momentum if the Bank of Japan does not give additional clues on its monetary policy plans in the coming week. After taking a 4-month break on this asset, we resumed trading the USDJPY last week, kicking off the new year on a strong note. We secured over 800 pips in profits from multiple buy entries, capitalizing on the breakout of our last week's key level above the 144.800 area. Congratulations to everyone who stayed faithful to our analytical approach. For a detailed breakdown of last week's commentary for educational purposes, you can find the link in the description box below or in the top right hand corner of your screen if you are watching on my YouTube channel. Amidst a bullish sentiment driven by a resilient US economy, our analysis will integrate technical and fundamental perspective. We will utilize our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to uncover the potential trajectory of price action in the coming week. But before we proceed, it is essential to emphasize that this video is for educational purposes only and not financial advice. While I aim to provide insights and enhance your understanding of price action analysis, always exercise caution and consider consulting a financial advisor before making any investment decisions. Now, with the groundwork laid, let's dive right into the business. So we are going to be starting this week with the daily time frame, where I was able to take into consideration the nature of price action since the beginning of last year, and it's quite obvious that price action has been very bullish. And in fact, when we connected the series of higher lows here, we have a beautiful ascending trend line to work with. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying that asset. Now, in addition to this ascending trend line are a couple of levels here which actually captured the lows and the highs since price action broke out of the 141 area in the month of July, giving us a range to work with as price appear to have been confined within the 151.900 area and the 141.00 area in the last 7 to 8 months now, to further emphasize the uncertainty in this market. To make things a little bit easier for us to capture the next potential move, I have my key level duly situated at the 148.800 area, which is going to be playing a major role in guiding our trading decisions for this week. And in fact, if we take a closer look at this level, you will see that in the last 5 to 6 months, this area had played a major role in determining the direction of price action. Look at what happened here throughout the month of September/October. This area was a very strong buying niche, as you will see here, as every attempt by the sellers to break through has always been met with strong resistance from the buyers, until finally this level was broken to the downside in the month of November of last year. And as it is right now, and since the new year has begun, price is gradually approached that level. And in fact, as soon as price got into that area in the last 3 days, It appears that buyers are running out of steam as we saw how price closed last week trading session just exactly around that area. Now, going into the new week, you would agree with me that we are at a very crucial juncture in this market. We are depending on how market participant reacts to this crucial key level will determine if we are going to be buying this asset or selling. You know how we use our key levels in this community. If price will break out of the key level, I want to continue to look out for buying opportunities. And in fact, if selling pressure persists below the structure, we might see a situation where price could drop back into the ascending trend line or the 141.00 area. Now, in an attempt to position ourselves strategically for next week's trading session, I have a simple setup identified on the 4 hours time frame, which we will be using to guide our next move. However, before we go into the 4 hours time frame, it's very important for us to keep tabs with the fundamental factors that will be affecting the market sentiment we have. Now, for those of you who have been with me for a while now, you do understand that by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves for the next move. Now, based on these assets we are looking at, we shall be focusing on economic features from both the United States and the Japanese economic docket. Now, for this week, based on the asset we are looking at, the first impactful event is coming in on Tuesday, January 23, the monetary policy statement, which of course is a comprehensive assessment provided by the Bank of Japan, detailing the economic conditions, outlook, and the rationale behind their monetary policy decisions. Its impact on market sentiment is significant as investors closely analyze this report for insight into future interest rate moves, inflation expectations, and the overall economic health. Then, that same day, we look forward to the Bank of Japan interest rate decision, another key economic indicator that is the outcome of the Bank of Japan's meeting, where they decide whether to change or maintain the current interest rate. Now, fast forward to Wednesday, January 24, we are looking forward to the S&P Global publications from the United States. And for those of you who do not know, the S&P Global is a prominent financial service company known for providing credit ratings, research, and analytics. Its impact on market sentiment is substantial, as its credit rating and market insight can influence investors' confidence, affecting the perceived risk of various financial instruments. So we wait for the publication of the manufacturing PMI and the services PMI on that day. Then on Thursday, January 25, we look forward to the gross domestic product annualized for quarter 4, a key economic indicator representing the annualized percentage change in the United States economic performance, representing the total value of goods and services produced within the US borders. On that same day, we have another impactful event from the Japanese economic docket, and that is the Consumer Price Index, which is a measure that examines the average change in prices paid by consumers for goods and services in the last month. Then on Friday, we have the core PCE, which measures the average change over time in the prices paid by consumers for goods and services, excluding volatile food and energy components. So these are the impactful events we look out for this week, and we do understand that the anticipation of this event usually affect the market sentiment, and of course we shall see this reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, as I have a simple setup that we will be using to guide our decisions for this week. And on the 4 hours time frame, what I did here was to consider the nature of price action since the beginning of this year. And it's quite interesting that the price has been very bullish. And in fact, after connecting the series of higher lows, we have a beautiful ascending trend line here. In fact, I have a couple of them here to guide our trading decisions going forward. Now, as long as price remains above this ascending trend line, it makes quite a lot of sense for us to look out for patterns and structures that support the idea of buying this asset. Now, if we zoom into the current structure, that is looking at what happened during the second half of last week's trading session, you will see that after testing the 148.800 level, this is the highest point price action has been for this year, price action appears to be confined within a range right now, which further emphasizes the level of indecision at those points in time. And in fact, with this beautiful pattern we have here, the possibility of an uptrend continuation is still very strong, where we want to see price action breaking out of the key level at the 148.800 to give us an uptrend continuation pattern to work with for the new week. However, if the support line at the 147.600 is broken to the downside, we will need some further confirmations to sell this asset, like the breakdown of that ascending trend line, which will be a good opportunity to capitalize on a sell-off to the downside. So for this week, we have a simple setup on the USDJPY, where our center of focus for this week will basically be between the 148.800 area and the 147.600 level, where depending on the direction of the breakout will give us an idea of where price is likely going, at least for the first half of the new week. But trust me, I will be with you in the comment section of this video on Monday morning to give you an update on what I think will happen after monitoring how participants in the market will be reacting to this range we've identified here. If you have found this content helpful and useful in making your independent trading decisions for this week, I would greatly appreciate your support by giving the video the thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.